how to get funds for your business? Well, fear not. Our experts are here to provide you with various options to get funded and grow your business. Hi everyone, I am Pradhan from Clio, where we serve more than 4 lakh growing businesses. Subscribe to our channel to learn more about business ideas, business finance, and filing business taxes. Today, I am going to share 12 best options for financing your business, shared by our seasoned experts based on their industry experience. So let's begin. The concept of crowdfunding is quite similar to mutual funds on a basic level. In this option, more than one investor is involved and they offer a fixed amount of money based on your business idea, goal, plan of action, and plans of making a profit. You can gather crowdfunding from friends, families, and entrepreneurs who believe in your business concept and have the means to come together and fund your aspiration. Well, crowdfunding also helps you get the crucial funds from the idea stage itself. The Pradhan Mantri Mudra Yojana or PMMY provides loans up to Rs 10 lakh to non-corporate and non-farm small or micro enterprises. Under this scheme, the loans are provided by commercial banks, small finance banks, microfinance institutions or MFIs, non-banking financial company or NBFC. You can apply for Mudra loans by approaching any of these lending institutions or online through the Udyami Mitra portal. Under the PMMY scheme, the loans are divided according to the different developmental stages of businesses, namely Shishu, which offers loans up to Rs 50,000, Kishore provides loans above Rs 50,000 up to Rs 5 lakhs, and Tarun provides loans above Rs 5 lakhs up to Rs 10 lakhs. The Credit Linked Capital Subsidy Scheme or CLCSS renders a subsidy for technology upgradation to small businesses. This scheme provides an upfront subsidy of 15% on institutional credit up to Rs 1 crore for identified sectors, subsectors, technologies. However, there is a cap to the maximum amount that can be availed as a subsidy under the scheme, which is set at Rs 15 lakhs. You can approach the 11 nodal banks or agencies associated with this scheme to avail the subsidy. The Credit Guarantee Fund Trust for Micro and Small Enterprises, that is CGTMSE, is a loan scheme launched by the government to provide collateral-free loans to small businesses. As per this scheme, a credit facility up to Rs 200 lakhs is covered on an outstanding basis for small businesses. The scheduled commercial banks, that is public sector banks, private sector banks, and foreign banks, are select regional rural banks that have been classified by the National Bank for Agricultural and Rural Development, provide loans to small businesses. You can approach the scheduled commercial banks and then select the rural banks to get credit under this scheme. Many banks and financial institutions offer term loans to small businesses for business purposes. The loan comes with a fixed loan amount and repayment tenure. The loan amount, the interest rate, and the loan period vary from bank to bank. The repayments are made in monthly installments such as equated monthly installments or EMIs over a defined period of time. Term loans can be offered at both fixed and floating rates of interest. It can be a short-term or long-term loan approved and disbursed by any financial institution. It can either be secured or unsecured and can be used for various business purposes such as business expansion, buy fixed assets, meet working capital requirements, paying off rents and salaries, hiring new staffs, etc. The working capital loans are offered to small businesses by banks and financial institutions to fulfill their daily cash requirements. You can avail of these loans to meet the short-term needs of liquid cash. However, these loans cannot be used for investments or the purchase of long-term assets. Business funding is granted for half to 1 year and interest rates range from anywhere between 12% to 16% depending on the assessment of credit risk of a business. The loan amount may vary from bank to bank. However, small businesses can avail a minimum loan of Rs 50,000 at a fixed interest rate. The finance received from this loan can be used for various purposes such as debt payments, buying inventory and raw materials, paying employee wages, managing overhead costs, paying suppliers, etc. Are the financing options making sense? If it is, write clear in the comment section below. Also, do let us know what topics you would like us to cover in our future videos. Apart from the working capital and term loans, banks and financial institutions also grant various other business loans for small businesses. These loans, so procured, can be used for various business needs like purchase of inventory and equipment, operating capital, that is working capital, fund requirement for expansion, etc. The loan schemes offered by different banks or financial institutions have different terms and conditions applicable. Each loan scheme offered by the banks or financial institutions have different interest rates. You can find the details of the various business loans provided by the banks on the respective bank's website. Some of the banks which offer business loans to small businesses are State Bank of India, HDFC Bank, ICICI Bank, Axis Bank, etc. Some of the financial institutions which offer business loans to small businesses are non-banking financing companies, that is NBFCs, small finance banks or SFBs, regional rural banks or RRBs, and microfinance institutions. The Government of India has launched a new web portal, that is SIDBI Loans in 59 minutes portal, to provide loans to small businesses in only 59 minutes. You can apply for business loans on this portal. The loan processing on this online portal is fully automated. This portal will process the loans within 1 hour. After the loan is approved through this portal, the loan is disbursed to you in the next 7 to 8 working days. The business loan in principle approvals are provided from Rs 1 lakh to Rs 5 crores. The loans are provided with or without collateral. The rate of interest starts from 8% onwards. The Small Industries Development Bank of India or SIDBI is the primary financial institution for promoting, developing and financing MSME, that is micro, small and medium enterprise sector. SIDBI helps small businesses acquire the funds to grow, market, develop and commercialize their technologies and innovative products. The bank provides several schemes and offers financial services and products for meeting the individual's requirements of various businesses. It offers various direct finance loan schemes such as assistance to re-energize capital, investments by SMEs, top-up loan for immediate purposes, SIDBI loan for purchase of equipment for enterprises development plus SIDBI loan for purchase of equipment for enterprises development, Smile Equipment Finance. The National Small Industries Corporation NSIC is a government enterprise that aids the growth of small businesses by providing services including finance, technology, market and other services across the country. The NSIC has initiated the Raw Material Assistance Scheme to help small businesses. The Raw Material Assistance Scheme provides finance for purchasing business raw materials. This NSIC scheme facilitates raw material procurement with credit support for up to 180 days. Expecting a large investments? Go to venture capitalists or VCs. Venture capitalists are companies or funds that raise funds from various sources and use the corpus to further fund startups. They are ready to invest in small businesses, funding young, unproven companies that appear to have great idea and a great management team. The best part about venture capital investment is the expertise and monitoring that they bring along. Ordinarily, venture capitalists invest in equity, and once the business releases its IPO or is acquired, they leave. Venture capitalists usually look for small businesses with good enough traction and a strong team. But if you are opting for venture capitalist funding, to be flexible, you have to be flexible enough to take their inputs and accept the close monitoring. Angel investors are real-life business angels having deep pockets. These are the high net worth individuals or HNIs who will be willing to fund your venture in return for ownership equity or convertible debt if they have conviction in your product. There are individuals with surplus cash looking for investing in promising startups. This funding option has business minds looking to earn interest out of your success, and they may expect as high as 30% equity as well. Although angel investment comes with its issue of high interest expectations and lesser investments compared to venture capitalists, it is important to remember that Google, Yahoo, and even Alibaba were a result of angel investing. So, folks, this is what we recommend to obtain finance for growing your businesses. Let us know if you have any business financing experience of your own and have some advice for our YouTube community. If you need any assistance in business compliance, you can explore the wide range of business services that we provide. Click on the business service link in the description box to explore. We also provide services like filing income tax return, GSTR and ROC forms of your businesses and ensure that you complete your business compliances on time. Lastly, you can even contact our experts from the link given in the description to clarify any questions or queries for your business. Don't forget to subscribe to our channel for more business related content. Thank you so much for watching the video. Take care.